At IBCanada Group, we are your complete and independent source on the infinite banking concept, serving Canadians from coast to coast.
Hello and welcome. My name is Steve McClellan, the financial engineer and proud member of the IBCanada Group. And today we got a great show. We've got a guru, a real estate guru out there that's really has a mission to share what the top 2% are doing, the wealth creators, and bringing this to every single Canadian. And she's also a fan of the infinite banking concept. And we're going to have a discussion today about how she became successful, what she does to continue to be successful, and what tips she can give to you and I. So I know you're going to get a lot of value today. Let's get started. The one and only Monika Jasyk. How are you today? Tell me something awesome that's going on in your world today.
Every day is awesome. I think every day is a gift, and every day you wake up, it's another opportunity to live your best life and also give back and help others live their best life. And that's really what I love to do.
And did I get that right? Tell me a little bit about RPI, what it is exactly, and what you're hoping to accomplish. One of your missions, I guess.
Well, our mission actually is to help 1 million people across the globe start building wealth like the top 2%. And I love this intro that you gave me with this guru and this successful, and I don't know who you're talking about. It's just fantastic. But it's funny because who is the top 2% really? And, in the other same breath, you can almost say, who cares who the top 2% is? I really want to bring back the focus on the everyday person. And that's where I really see myself as just an everyday person who really figured out how to transform their financial situation and really create it. So my husband and I and our 4 kids have really been able to live our best life. And from that point of understanding, I really aim to help other everyday people, really encourage them to do the same concepts, the same tools, the same knowledge without having to go through the trials and tribulations that we did go through, and really encourage them to really reach out and live their best life and be able to afford your best life. It's one thing to want to do certain things, but the missing piece really is, how can you afford to do it? And RPI education really is geared, that is our mission statement, is to help fill this wealth gap that developed countries are experiencing today, which really is the extinction of the middle class because of the problems that we're experiencing. And how can we help elevate people rather than go down to the other option, which unfortunately is poverty level. And that's really where so many people are gearing towards. A job, and I know people probably heard this a lot of times, stands for JOB, just over broke.
Yeah.
So that's really what we stand for at RPI Education. We're really about education and empowerment, and just really sharing our teams, our concepts, and our methodologies with everyday people to really help guide them and know you're not alone. And there is another way.
Right. And we'll talk about what separates the haves from the have-nots, the wealthy as from the middle class down the road here. But because there are just small little things, and it's before it used to be probably education, but I wouldn't really say that is the case anymore. If you don't know how to do a lot of things, you can just Google it. But it's fine. I guess it's finding the proper education and then putting that education into action is a big separator between those that do and those that wish they did. But your main focus is on real estate. Can you tell me why you got into the real estate? What's the story? I'd love to hear the story of got you into real estate and real estate investing.
Oh, I do love real estate. And I do think real estate is probably one of our main focuses to help people build wealth and really help solve a lot of these wealth problems. And our story, like I said, starts off with us having a wealth problem. And our problem was, I did not want to work full time. I wanted to be a stay-at-home mom. I did always want to work part-time, but that's really what equates to where we live is almost financial suicide, which is living off of one salary and really setting aside, another salary that just was not making money. So I noticed that really early on in our early married life. I finished my master's degree and had our first son and realized I was really spreading myself thin. And it was really just not my jive to work full time and have kids. I really just wanted to do the best I could as a mother and just really give that my primary focus. My husband obviously was on board to do that, and he was making great money. He had a great job. But part of being at home, I was really focusing on the finances as well. And we really wanted to do well for our family. And our family grew rather quickly. We do have 4 kids. And a lot of this happened when we had 2 kids. And we went through the wealth experience that so many people go through. And we were in our 20s when we got married. So we were just navigating our way through adult life and learning about all these amazing things like getting life insurance, buying a house, paying taxes, paying a mortgage. You have to really grow into this. We're not born knowing what this experience is like. And as a stay-at-home mom, I was also focusing on the finances to really make sure that we were insured to protect our family. That was our very first big financial move. And also we were helping, manage the budget, the daily budget, and funding long-term expenses like our retirement. But more of concern was the education for our kids. So my background's in teaching. Education is very important to me. I'm all for college, university, send your kids there. So when we were going through on this one salary and I was really paying attention, I was following the wealthy barber strategies of Susie Orman. I was trying to have a balanced budget, live on less, make more. And we had a financial planner who literally cold called us. Like, I actually answered the phone. They said that they're a financial planner. They ended up across the kitchen table from us. We're here in our 20s. I'm like, hey, what are we doing? And we walked out with life insurance, which was amazing. And he also walked us through the traditional route for long-term financial planning, which was really your retirement and the kids' education were the 2 main points. So he explained to us, really, he was a great guy, and explained to us how to do things the traditional way, really, which was, how can we take advantage of, my husband's employer matching program and do these types of savings, how we can open up an education savings plan and match with government grants and all that stuff. And that was fantastic. And that night, we slept so much better. We felt like we were really doing the right thing on our financial journey. We were insured. We had a savings plan. We had a retirement savings plan, but everything was based on this budget. And the one nagging thing really that was always bugging me was we never made enough money, because now we were setting aside money for retirement. We're setting aside what we could afford. We're setting aside money for insurance, what we could afford. And we're setting aside money for education and what we can afford. Plus, we are having money to, live our lives and do whatever. Also daycare, Montessori, I wasn't full-time stay at home. I was part-time too. So there was a little bit extra income, but nothing compared to what I'd be doing if it was full-time. And for a while it was sort of working, but it was just always living in this budget bug me. And I always wondered, how could we make more money? And if my husband's making this much money, what the heck's everyone else doing? Because he was doing pretty well. We were in that, like, just broaching that 6-figure bracket, which is supposed to be the best thing. But he was getting really frustrated because he was trying to make more money to fill this wealth gap by working more. But his checks kept getting less, which was really confusing. So when we had to look at that at tax time, we realized my husband was literally trading time for money. That was our only strategy. And he was getting taxed the more money he was making. He was increasing his income brackets and getting taxed more so. So he's working harder. He's bringing home less. We're setting money aside. We don't know how it's growing or what's going on. But when 2008 happened, we did know what the negative marks were.
Yeah.
So now
Okay.
we spend years saving the money, and now we pretty much lost a lot of the money. And that's when I really realized the only hope that we have for us to retire or help send our kids to school or really solve this wealth problem is me going to work full time. And if we're in a society that takes 2 6-figure salaries to get by, that's to have somewhat of a retirement, to be able to help your kids do whatever to get them to school. Not that I even had any clarity on any of these goals. We'll get to that. What kind of society is that we're living in? We have to do something differently. And that's when I, like so many people, just read Rich Dad, Poor Dad. And it won't teach you how to invest in real estate, but it really gave me a great financial lesson that taught me the difference between assets and liabilities and what a powerful wealth builder real estate could be. And from that point, we decided we definitely want real estate in our portfolio.
Yes, I think it'd be, beneficial if they had that book. You mentioned The Wealthy Barber, I think earlier on, the Rich Dad, Poor Dad. If that was mandatory reading at schools, I do believe our society would be so much further ahead. And even if financial advisors or that financial planner that you talked about read it, the industry would be so much further ahead. You mentioned the traditional ways, usually putting 10% away for retirement and trying to live off the rest, maybe buying term insurance to make sure if anything happens to you. That's generally what the traditional did. And you said that in 2008, just mutual funds, whatever. The money can disappear just as easy as it comes in.
And there was no real goal. Like when I look back now at what I know today, the main goal for retirement, and tell me anyone listening to this, they feel the same way, is okay, so when you're 65 and you stop working, how much money are you going to need to live off of? How much is your house going to be? Is it going to have a mortgage? No, that's going to be paid off. So you don't have to worry about that. What kind of retirement do you see you having? You'll probably eat less. Your kids aren't so dependent. Maybe you want to go on some vacation. Like, is this your best life? That's the first thing. Even if it's not, is that really a number that anyone has set and is helping you monitor? I call this the hope and prayer strategy. Is there really wasn't that number that with these traditional financial planners. Now I know other financial planners, they work very closely with their clients and they really create these important benchmarks and they monitor these investments. I'm talking about what we did, the set it, forget it approach. And we were asked one question: what's your risk tolerance, low, medium, or high? After that, we're off on our own trying to analyze statements. And we had no one navigating those waters for us. So even when you have that, or even the cost of education, it's what can you afford to set aside and how can you take advantage of these grants? So now that we've actually seen this, like a lot of people think that most Canadians do not have savings for retirement. It's not mandatory here. And I think the average savings really is of the people who do save is about $250,000. And a lot of people think $1 million is like a lavish retirement. And in reality, that just equates to $50,000 a year if you live for 20 years, and then you're taxed on this sort of stuff. So now that we look back on it, you think, how much money do I really need to retire? And can this type of savings mechanism really, really help me get there? Or do I have to do something different? And the same with the kids' education, because I could actually tell you now, exciting news, our oldest is going to university next year. We have maxed out his RASP, doing the exact traditional way. And I could tell you what the exact results are. So doing this extra $50 a month and taking advantage of the grants and doing all this sort of stuff diligently since he was about 2 or 3 years old, we now have $13,000.
No.
And I could honestly tell you, if they stay in school, that's the tuition's not as bad as the US. I feel worse for our US clients. So we help achieve these goals. But with our Canadian clients, he's a very strong student. He got all sorts of financial scholarships, all that sort of stuff as well for academics. And that amount really will pay for the tuitions between about $10,000 a year, say. So it's not so bad in Canada. But when you have all the other costs, you're looking at around $33,000 a year. And so that's coming to about $132,000 for him in total. Times 4, now we're almost at $600,000. if we want to fund, and that's if they stay in Canada and don't go out of province for their education. So you think, wow, you know, like I remember all those years, that $50, man, like we were doing that budget thing, that could have been groceries, you know, that could have been, and I was cutting the costs, I was turning the power off, I was doing all this stuff. But if you really want to reach these true savings goals, and I'd encourage everyone to really map out, what does it really look like in these numbers? And even if you kind of play around with the interest rates or go to your traditional financial planner and say, if I do things the traditional way, how much money do I have to set aside, you know, to reach these actual real life milestones? You're going to realize the same way I realized, you got to do something different. We have to start investing differently, thinking differently, acting differently.
We can't be doing the same as everyone else. And I shouldn't have laughed there, because that is actually, it is very alarming and it's sad actually, because that is what the majority, well, I wouldn't even say the majority of Canadians are saving for the future. But those that are doing exactly what you said. And unfortunately, it's not what you have, it's what you get to keep. And, you know, like you said, 13,000, it's better than nothing. But it's really
will cover
1
at
year.
Least first year.
Yeah. First year,
but
maybe.
The good news
term.
is, I mean, we did figure out another way. And because of that, we don't have this as a problem. That's just like, could be like beer money for him. Which it will not be, by the way. But it could be used towards something else or something extra. But I'm glad that that's not the only factor that we have. And it's so easy with real estate for Canadians to cover the cost of retirement, the cost of their kids' education with even just one home. Real estate is the most powerful wealth tool out there. Now I'd say IBC, the infinite banking is pretty up there with it. So
yeah, I was going to say,
my new passion. I love it. But
let's talk about the new way that you found wealth, I guess. And in IBC, the infinite banking complements the ability to invest in real estate or invest in more real estate. It almost acts like a real estate investment itself, if you look at it different ways. But just from your experience, you started a business while raising a family. So respect to you, hats off. We all know that running a business isn't all sunshine and rainbows. When you're helping people today, what do you see their number one problem is? What's the number one problem of your clients and those that you're trying to help?
Just better returns over their investments and lack of clarity with their savings goals, and just realizing that they are where we were, you know, like their kids are approaching university and they don't have savings. They're retiring or they want a career change and they can't afford to do that. They're too dependent on their job and they're not getting the returns that they want in their traditional products, and they don't know how to achieve what they want. They have that lack of clarity because people are so busy. Most of our people are parents and they're professionals. They're busy working and they're busy driving kids to hockey and ballet. And there's only so many hours in the day where people work longer than ever now. And then when they get home, they literally shovel food in their mouth. And if they're not eating in the car and going to kids' activities, coming back, maybe watching an episode on Netflix of their favorite show before they hunker down to bed, wake up the next day and do the same thing over and over again. And time goes so fast that then these savings goals get closer and closer. And then you're out of time. You're like, now what do I do?
There's so much truth to that. It's almost like the vicious cycle of money. You work hard, you get a paycheck, and then you're like, man, I work so hard. I got to buy stuff and celebrate. And it fills your life with busy things. And then you end up working harder, and then you spend more, and you get burnt out. And another thing that I've noticed, that the difference between middle class and the wealthy, middle class talk about retirement. Oh, when I retire, where the wealthy, retirement's almost like a dirty word. You know, they more talk about financial independence or working on my own terms, or, you know, almost FU money, if you want to be blunt that way, right? What's your definition of financial independence or success? I would say, how would you categorize financial independence?
I love that question. I think it's time, money, freedom. Do you have the time that you want in your life to live the life you want on your terms? And do you have your assets working for you to give you this time, money, freedom? Are they giving you the returns that you need to really live your best life, to wake up every morning and live a life that you want, not the life that you're forced to live? To take those cards that you've been dealt in life and reshuffle the deck, pick what cards you want from your deck and play your own hand. This is your one life, guys. You got to live it. Let's go out there and do this. And you can do this if you're able to create your own life. So everyone wants great stuff. Everyone wants to retire, but no one wants to sit on a beach all day long. You get tired of that after 6 months, right? You know, it is not about retiring. It's about you want to stop doing what you're doing. That's what you want to retire from. The wealthy don't ever retire because they're living their best life and they love working because they're doing something that's passionate. They're doing something that's meaningful. And they also, the number one reason, remember when I was saying, Vaughn, my husband, who was trading time for money, was getting very unpassionate about work because he was working harder and noticed he was bringing in less money? That is discouraging for the best of us. You could absolutely love your job, but the fact of the matter that all your income and wealth is based off that one job, not does it only put you into the box like the dark ages and you have a ceiling and you're only able to make enough and you always have to live off a budget. So it's not your best life, but it also weighs heavily on you. How would you like to go to work every single day doing what you do? Because it's not that we hate working. It's the fact that we have to be there. If you went to work every single day and you had that exact same amount of income coming in while you're sleeping, would you really hate your job so much? Because you'd be like, yay, I'm like a call rep at this company. I make $50,000 a year and I don't have to be here if I don't want to, but I am because I love the people. My coworkers are fun and I'm planning on, you know, moving up and I really get a lot of joy out of this job. I absolutely love it. But guess what? When coronavirus hits again, if it does, or the next pandemic comes, or if I want to take a trip around the world and do something differently, or I get another opportunity, or my job leaves me. See, everyone's so busy, worried about leaving their job. Your job really might leave you. That's actually more likely to happen, your job leaving you. It's not the end of the world because you have this other income working and working for you rather than you working for your money. The top 2% do not trade time for money. The working class trade time for money. Top 2% have their money working for them. Warren Buffett says the true meaning of wealth is how much money do you make when you're sleeping?
Love it. Love it. Love it. Love it. You are a wealth builder. You're the founder of RPI, Real Property Investments. What's the one thing or the biggest thing that you do for your clients, aka what's the secret to your success?
The secret to my success is figuring out what actually works. And we just created a wealth immersion program where we literally immerse people into the wealth community. And this community is not just filled with me, as much as I'm sure as delightful as I am, yammering on podcasts and YouTube and TV, and I love it. I have a lot smarter people around me as well. Like I have my team that helped me get to where I want to get there. It's like amazing people like you. And this is really the secret here, is having access to a community of experts who specialize in their particular niche market that all works together to really help people invest like the top 2%. So we've identified 7 pillars to wealth that we really focus on at RPI. Real estate is just one of them. IBC insurance is another one of them, hint, hint. But we have other things. And so we have experts that are able to teach you about each one of these important areas. But as a client of our own products, remember guys, I just wanted to be able to stay at home mom. I didn't come intentionally create a business. Our business formed from us as real estate investors, figuring all this stuff out, meeting great people along the way, and slowly just sharing our community of how we have personally elevated our wealth, and we continue to do so every day with people across the globe. Because we just continue to expand our teams across the globe and help. How can we help this million people really fill this wealth gap? So that's really the secret of what we work on at RPI, is really a community. It's not expensive courses. It's not these mentorships. We do have coaching options. We do have courses. We have these things, but it really is a system that will take them through these 7 pillars of wealth and really help them start investing like the top 2%, being like the top 2%, and having access to amazing experts like you that they can continue to create, monitor, and grow wealth on a regular basis.
Right. So you give them the 7 pillars. So they got the action steps, the community, which really is the power of association. So having access and hanging around with people that are actually doing it and are very successful just brings it all together.
Absolutely.
Boom. Well, if you were just talking to one of your clients and they're in this process, what would you tell if they had to focus on one thing, or what would that be, the one thing that you would tell them to focus on during this journey with you?
I would tell them to focus on the RPI Immersion program, because it immerses them into a community, like I say, of experts, but also allows them to follow a step-by-step system of each one of the pillars to really help push them through, but get live support. So when I created this, we used to have a members only site, and it was because we do great presentations every month that experts like yourself present on, and we promote these, we give them to members, and we love that. But it was a DIY thing, but we felt like, do they really know the order of stepping this in? So the first sense of order really is mindset. You really need to shift your mindset and create a wealthy mindset. The top 2% invest, like they think a lot different than everyday people. The way they view money, the way they view budgeting, you can only budget yourself to a certain extent. There comes to a point where you guys got to make more money or get your money working for you and get better returns. And so the faster that people can acknowledge that, I think the better off they are. So the mindset definitely, and to be part of a community of like-minded people, I think that really is one of the best places to start, is to get in the right mindset. So you're ready to receive wealth and you're open to knowledge, not just piecemealing different pieces of advice on YouTube and all these sort of things. Is why not work with someone who has a proven system and experts like yourself that's able to really guide them through it. And that's all they do. So I think it always comes down to mindset to start with and figure out, what the heck do you want to do in the first place? Like, what are you trying to achieve? And because a lot of courses and information out there are cookie cutter courses that show you what to do, but is it right for you? Because I'm sure your wealth goals are different than my wealth goals. So how can we take this amazing advice and community and tailor it around your personal needs? Now, the components that we do talk about definitely are real estate. I do feel real estate's the number 1 wealth builder. We also talk about strategic leverage. How do people get the money to invest? And I know with our journey, we felt like we had no money to invest. If we didn't know how to get mortgages effectively or tap into existing assets, we never would have been able to get started. We never would have been able to buy real estate and create those savings goals for us that we've personally benefited from, which is our kids' education, as well as our retirement plan. We also help people with self-directed investments, especially with their registered funds. People think they have to invest in the bank and get these returns and do these sort of things, and you can be in total control. So my other 3 kids, exciting news, none of their RESP money is with this traditional thing. We've managed to pull it, and we've invested it in all sorts of interesting opportunities that we were able to grow with our experts and determine what is our savings goal. Now that we know that we need to make $132,000 per kid a year, we're able to take that and invest it in products where we can manage that and create that plan. So I think that's really important as well.
That's awesome. So but you've just covered so much. I want to summarize it. And you said it all starts with mindset, thinking that you can. That's the first thing. It's the mindset. I agree, because when I shifted, I realized when I started my business, my thinking was stinking, and just a simple mind shift, boom, business started to take off. And you also mentioned you can't save to wealth. You got to invest, and investing in the right things. And you love the real estate, and you mentioned on how to acquire money. You help people with all that awesome stuff, right?
Yeah.
All right, continue.
Well, let's not forget infinite banking.
Yeah.
So that's another pillar to wealth is infinite banking. And I know we're going to get into that. And that was actually a more recent development that we stumbled across too. And it was in our site for a very, very long time. And when we get into that component of this webinar, I'd love to share that experience as well. And I'm sure, yes,
Well, let's get
really
into
your
it
baby
now.
right
Yeah,
there.
I'm excited to hear this because you did share with me a little earlier how you got onto it. Yeah, share that with everyone because I find that very interesting. How you were
Well,
introduced to infinite banking and your original thoughts and where you are today.
Well, I love it today. But
Yeah.
when we started out several years ago, and that financial planner came and proposed the insurance products for us, it wasn't, we did take term, but it wasn't just term that we were presented with. We were presented with the universal or whole life policy, which thankfully we actually ended up declining. And the more I looked into it as well, the traditional savings advice talks about these different types of policies as, like great ways that you can build wealth. And then they give the Gerber's commercial, which says for pennies a day, you can pay for your kid's wedding or give them their money back when they're, X amount of years old and pay for this expense and pay for that expense. And in reality, I think it was kind of trading tit for tat in that regards, the way a lot of these were. If you did have the investment advice, you probably could achieve these savings goals faster anyways. So I kind of ignored this advice. And the more I got into the wealth building world and in our journey, and the more people I was meeting, and the more people that was sort of pitching these products, that I was not meeting the right insurance experts. And a lot of them would come to our events and meet us in the communities and talk about these things. But it really wasn't as a benefit to the consumer or the person receiving the insurance. It really is more from the insurance salespeople who come from a commission-driven standpoint. And a lot of these products are highly commission-driven. So if they go to work and they have their Monday meeting and their boss says, okay, guys, we want you to sell this amount of these policies and this amount of this and this amount of that, where do you think their focus is going to be? So that always kind of, knowing that you could get the same investment results probably faster, especially as our knowledge grew, than the standard insurance kind of forced savings. That was one thing. And the fact that it was largely commission driven always really deterred me away from this product and just invest in term. And it's also very confusing. And a confused mind doesn't act too. So as soon as things get complicated, I have the Warren Buffett, principle. If investments are complicated, then just, don't do it. And if a 4-year-old can't explain it with a crayon, then don't do it. So fortunately, one of the infinite banking consultants has the ability to explain this in a crayon. With a crayon, the infinite banking concept. I was watching our high net worth clients and people that we work, like our EMDs, doing these types of policies. It wasn't their primary focus, but because they've seen the ultra wealthy benefit from these, I knew that it existed. I just didn't know what exactly existed and who was the right team to make it happen. And it wasn't until I met IBCanada that I really, really started listening. And I really, really knew that this is the right team to create my infinite banking policy. And it was explained to me like that 4-year-old concept, which is exactly what I needed. And it actually had to be explained several times. And I knew from the quality and the genuineness of the IBCanada representatives to really have that same client-centric approach that we have at RPI Education, which is we focus on the client's needs first. So I love how the companies don't worry about commissions. We don't worry about quotas. We just worry about the human being and how can we genuinely really help this person build wealth. Now, the reason I started listening to this was, yes, I was seeing it happening by our very, very highly qualified, sophisticated exempt market dealers. They were kind of, doing it themselves. And it was something I kind of wanted to start learning about myself because I was noticing a lot of people at RPI Education, especially the entrepreneurs were having a hard time qualifying for mortgages. We, as entrepreneurs too, sometimes it's difficult for even us to qualify for mortgages. We talk about this mortgages quite heavily in the Immersion program. And so I was kind of hearing these different things, and I thought now's a time that we want to learn more about the infinite banking. I'm just going to take this call and see what happens. And after, because it was explained in the right way, and I saw the credibility, because I do take a lot of calls, it clicked, and I knew in my heart that this is the right investment tool for us. And it wasn't until after the team took several calls to explain it to us and also sent us a lot of books. Anyone out there who's interested in IBC, I mean, that Nelson Nash book, Be Your Own Banker, Be Like the Rockefellers, all those books really show me the power of infinite banking, which is why buy your net worth, or why build your net worth when you could buy your net worth? That was like my moment there. And I'm like, wow, I could just buy insurance. And as a real estate investor, just by going through, now that I understand how it works, if we're making specific cash injections every year, say if we're flipping homes or burring properties or selling properties, I'm able to actually increase my policy, overfund the policy strategically, not in a way that's just beneficial to, like, I have finally found a team that's going to work with me and alongside me. You know, it's not just a commission driven based thing where they get something, you never see them again. That's what our past experience was. All of a sudden I got this wealth team who not only takes 4 appointments to explain this to me, they design a policy for us personally. It's something else we stand for at RPI. And now we work with this team to figure out what are our wealth goals for the year and how are we going to maximize our IBC policy, our infinite banking policy. And if you're a real estate investor and you're getting into this now, this is why this is one of our pillars of wealth in the Wealth Immersion program, is we want to show people, guys, you have an opportunity to take these cash injections, inflate your policies, your insurance policies, and then borrow back off of it again while you're buying your net worth. This is just genius. Like, why wouldn't you do this? And so that's really where the excitement and the passion came for infinite banking, because our policy came at a perfect time where we just flipped a house, and this is what we were able to achieve. And now I know for next year what the exact amount of income that I have to make to do this policy again. And if I continue to create this policy and continue to overfund this policy, according to our calculations, which we confirmed, we're at over almost $9 million in our infinite banking by the time we're 65. How is that for a retirement?
That is awesome. Congratulations. That's fantastic. And it's funny you mentioned you did not like the concept or the whole life, the policy, the product that was behind the infinite banking concept. And I share that same experience. When I was introduced to whole life, when I started in the financial industry, I was like, this makes no sense. The only thing that this benefits is the financial professional that's trying to sell this in the insurance companies. It wasn't until I was introduced to the infinite banking concept, I was given the book, The And Asset, which then led me to Nelson Nash, Become Your Own Banker. And I don't know if it's the engineer in me, but I dove very deep and found a way to make this even more efficient, more flexible. You mentioned the word control, and that led me to the good people, the other independent advisors at IBCanada that had that same philosophy, putting the client first, making this as efficient and effective and as flexible for the client versus the opposite, where it's very insurance heavy. This is your policy. I haven't seen it. I did not do your policy, but I think it would be very insurance light, but very cash heavy. Would that be correct to say?
Yes, and very, very personalized for our particular needs. And it's more expensive than term, but not being insured is the most expensive. And it's not a crazy, like, if cost is an issue and you have to budget in, because you can't invest everything in insurance, like that's just not, that's poor financial planning as well. But there are ways that the IB group works with you to make sure you get what you need, you can reach these long-term goals, and it still fits in your budget. It's not as expensive as I anticipated too. And I do know there are people out there, like I've heard some people, and this is more so in the States than Canada. One young lady was paying $8,000 a month in insurance. Like, I don't even know how that's even humanly possible. I don't care how rich you are, like $8,000.
Well, it
a
depends.
month.
Yeah, depends on how big that policy is. But yes, it can be very personalized, and it doesn't need to be these huge premiums that a lot of people think about when it comes to whole life. They actually can be very, very low. I think
Yes.
my personal insurance policy has a premium of around $3,000 a year, and it allows me to invest up to almost $50,000. And that, talking about mindset, I kind of wish I went bigger. So I probably will eventually have a bigger policy myself. And we've seen clients do the other thing. Can you go over again how, because you were talking about it earlier, but how the IBC or the infinite banking concept complements your current business or your investments with real estate?
Well, I think it just helps provide another way. One, the way we could start buying our net worth, not just building your net worth, because net worth is really funny. We do have an investment wealth finder that we have our students work towards and encourage them to write everything down. And it still peeves me to this day, the fact that traditional net worth statements really are, the assets and liabilities are all mixed up in them. So the education of what's an asset versus what's liability is in there. And it's kind of funny how sometimes when you start adding assets like real estate in there and you add stuff in there, it kind of almost skews the whole net worth statement. You almost look like you're better off when you're doing this traditional way when you start out, because now you have all these extra liabilities sort of thing, but in reality, they're good liabilities. Well, the most amazing, powerful thing was with the infinite banking. If you're to continue to buy buildings and you're to continue to buy real estate. Now, I want to also be really clear, guys, that at RPI Education, that we aren't here to encourage you to become full-time real estate investors. And you don't have to be a full-time investor, but you have to have real estate in your portfolio. And we're really only recommending the average amount of real estate to have in your portfolio. We could show you how that one house can help you save for retirement and for kids' education. The recommended amount that we have for people is one on your personal residence, but recognize it as a liability, not an asset. But two, you should have 1 to 3 investment properties in your portfolio. If you're doing this right, focusing on high growth areas, working with a team that could really help you get there, you don't have to have 1 million properties. So as you add these things in, you'll notice that your net worth statement is sort of shifting us around because now you have a lot of debt, and it's good debt versus bad debt. And it's also costly. I mean, even a $375,000 investment, it's going to be $81,000, that you have to put down. There's going to be lulls in your cycle. So you can never stop investing. Wealth does not sleep. We always got to monitor our wealth. So just because you bought your properties, it's not like you're off to the races and you don't do anything anymore, nor do you just have to keep buying more and more and more and more and more and more and more properties just to be an investor. That's not the way they work. When you add the infinite banking to that net worth statement, all of a sudden, boom, your net worth just goes way up. Now, technically speaking, net worth, who cares, really? Like, it's just, but it is your financial report card, and banks do care. And this is what we're presenting to lenders, we're presenting to banks as we get into bigger investments. And it also helps you graduate from eligible investor category, which most of us everyday people are in, to accredited investor category as well. So it's really a bunch of ways that you can continue to grow this net worth and really become the top 2%. And it also allows you to borrow from it, which I think you can overfund it, which is great, and then borrow it right back. And it helps you save on taxes, which is another one of our pillars that we work on, is taxes, how to make all this new money and not lose it all on taxes. So you definitely need to learn to set yourself up properly, and you need to learn to take advantage of tax, advantageous things like the infinite banking as well. So that's why I just love it so much for investors.
I can sense your passion there, Monika. You're a fountain of wealth information. I wish this conversation could continue, but alas, all good things must come to an end. This is a question that I ask my clients, and I'm going to ask this question to you too. If you knew you're only going to be on the planet for one more hour, now maybe you're jumping on a ship to Elon Musk's spaceship and you're heading to Mars, but you're only on the planet for one more hour. Who are you spending that hour with? What are you doing? And what advice would you pass on?
Wow, well, that's a great question. And I think I would just definitely spend that hour with my family, with my kids and my husband. And I would probably document it over some sort of public forum of telling them, really how life is such a gift. And every day that you wake up is a blessing. And you have to have gratitude that it is a gift. Nothing's a given. We're all one heartbeat away from death. So you need to make your best life and create your best life. And like Coco Chanel says, my life didn't please me, so I created my life. And that's the words of wisdom that I would be focusing on to them, and that I do tell them. And they're amazing kids who've been immersed in this whole journey. So to watch their attitudes develop, which is really, really funny and, entertaining as they're kind of navigating their world of money. And I would just definitely all money aside, what everyone really, really wants is their best life. And this isn't like Kim Kardashian flaky, live your best life and way sit on the beach. It really is identifying, how do you wake up every morning with pep in your step, with excitement to start another day, and say to yourself, what am I going to achieve today? And not feel like you have those limitations placed on you, because this is your one life and you just got to live it. You're not going to get another one.
Wow. So family is very important to you. Life is a gift, a blessing, but you have the ability to create your life.
Absolutely.
Gratitude. That's amazing. So I hope people are taking lots of notes, or they watch this over and over again. You dropped a ton of information that's so useful. Where can people go to find more about you and to find more about RPI and maybe start those 7 pillars of wealth creation that you talked about?
Excellent. rpieducation.com is our website, and people can sign up to learn more about what events are happening, or they could book a discovery call to talk about their wealth experience and what they're hoping to achieve, and we can help match them into the proper program for them, which really is, I believe that an excellent start is the Wealth Immersion program, which gives them 12 months into this wealth community. They have all the information they need in videos, downloads, activities that are put out in a set order. And they're able to also come live every other week and talk to professionals like yourself. Steve, I'm hoping to see you on our group coaching live call too. You should join us, because smart people like you have so much to share, and we love giving them that platform.
Yes, I think we'll be continuing these conversations for a long time to come. I appreciate everything you do. You're providing tremendous value, showing people the real way to create real wealth and avoid all the noise and distractions out there. So keep going, keep growing. Really appreciate what you do and your team. Any final comments before we leave?
I'd just like to thank you for having me, and also for doing what you're doing, and the rest of the IBC team for doing what they're doing. You guys are really helping change the world for people, and that's really what we're about at RPI. And it's just an honor and a privilege to be, even associated with such a fantastic company. And I'm really hoping that these sort of more, although they're old and proven systems and products, the infinite banking becomes something that every Canadian has in their wealth chest, because it really is needed to help people move past their obstacles and fill that wealth gap.
Yes, we really had that same mission of showing people and helping people grow, control, keep or protect what they build, instead of giving it away to taxes, fees, loss, as you mentioned, or the unknown. So again, commend you and all the best. We'll be talking really soon, I hope.
Thank you so much. Thank you.
IBCanada Group, your independent authority for information on the infinite banking concept.